I'm Brittany Lewis with Forbes Breaking News. At a Senate Banking Committee hearing on Thursday, Senator Elizabeth Warren spoke about cryptocurrency scams. The Massachusetts senator said, quote, "Crypto has made it faster and cheaper than ever before to rip off consumers." Warren spoke about the involvement of private equity and hedge funds in the crypto market and what it is doing to the mom and pop investors. Senator Warren concluded her remarks by saying she was preparing to release legislation to regulate the crypto market.
So, crypto has made it faster and cheaper than ever before to rip off consumers. According to the Federal Trade Commission, since the start of 2021, about 1 in every $4 that consumers were defrauded out of, totaling about $1 billion, was lost in a crypto scam. And those are just the scams that are reported, not the ones that people are too ashamed to tell anyone about, or the ones that people never report because they know the money's gone and it just doesn't feel like any point in it. Today is about scams, but crypto is not an industry with a few scam artists operating around the fringes. Crypto is an industry that is built to favor scammers. And some of the biggest players in our financial system are in on the con. Venture capital, giant hedge funds, and private equity rake in profits from a system that's designed to reward insiders and to defraud mom and pop investors. Now, Ms. Walsh, you are an expert on protecting mom and pop investors. So I'd just like to ask you who those mom and pop investors are up against. Are big institutional investors becoming more prominent players in the crypto market?
Thank you, Senator, for that question. While the FINRA Foundation focuses on retail investors and has information about retail investors, we've certainly seen from media reports that there are large investments by institutional investors and hedge funds and other entities.
In fact, I have some of the data. VC firms invested $33 billion in crypto-related companies last year. That's more than all the previous years combined. And hedge funds and other big investors are now the main source of trading activity. Last year, professional investors traded $1.1 trillion on Coinbase, more than double the amount retail investors traded. In other words, some of the biggest players in our financial system, these so-called smart money, are all in on crypto. Now, two companies that these big investors poured money into recently were Voyager and Celsius, which, as it turned out, both of them filed for bankruptcy earlier this month. Celsius, for example, announced raising $750 million from professional investors just months before it collapsed. Ms. Walsh, Voyager and Celsius made money by taking people's deposits and lending them out, a lot like a traditional bank. But they made astonishing claims, like offering up to 20% interest while claiming that they were FDIC insured and, quote, safer than banks. Does that have the earmarks of a scam to you?
Senator, I appreciate that question. And if that were happening within the space of broker-dealer regulation, FINRA would be able to look at the advertising because that's what we do. We would be able to look at the disclosures because that's what we do. It's important to have clarity in the digital assets.
Well, I appreciate clarity, but let's be clear here. No risk, 20% returns. Look, that it was a lie from the start. It doesn't take a lot of deep analysis to understand what's going on here. But notice it did not stop big professional investors from throwing money at crypto firms that were clearly drawing in mom and pop investors in a scam. So, Ms. Lubin, do you think that mom and pop investors who handed their money over to Voyager and Celsius are likely to be at the head of the line in getting their money back during the bankruptcies of those companies?
Thank you, Senator, for that question. And I wouldn't presume to tell you how bankruptcy law works. On the other hand, if those investors are considered unsecured creditors, they're going to be put into the pool with everybody else, and they're typically at the end of the line. I have some other theories, and there are other things being litigated, so I'm going to invoke investigative privilege and not discuss some of the other approaches that investors' counsel might want to take in some of those cases.
Fair enough, but this is going to be tough, right? They are not,
I think
as you
it's
say,
I
at the
think it's
head
an
of the
uphill
line.
battle.
That's right.
I'm sorry to interrupt. I think it's an
No.
uphill battle, and there's always an uphill battle in bankruptcy or when we put cases into receivership because there's rarely enough money to cover the investor.
Right. Across the crypto market, these big investors are funding, hyping, and then vampire sucking money out of crypto projects that scam mom and pop investors. Regulators need to protect customers from cyber criminals, from grifters, from other illicit characters that are scamming consumers from the shadows. But these shadowy actors shouldn't distract us from the big, seemingly legitimate players that are financing crypto and helping crypto attract the mom and pop customers who are going to lose their money. And that's why I will soon be introducing a bill to regulate the crypto market and stamp out the worst scams by scam artists, both big and small. Thank you. Thank you, Mr. Chairman.
Thanks, Senator